Good afternoon, everyone. It's coming up to 2 o'clock here on Wednesday, the 6th of April, and half an hour to go onto the American market opens, but it's being forecast to open significantly lower than yesterday after a down day yesterday where the market fell 57 points, as you can see, the S&P. And the news behind that, of course, is very hawkish reports from several Fed governors. On Vector Best, the number of shares on a buy divided by those in a sell has fallen through the floor once again, and our market timing indicator is less than 1, so we've got a short-term trend down and an underlying trend down, but the longest term measure of the trend remains up, so quite a confused and mixed situation. I got stopped out of one of my positions, the only position I had left, MATX yesterday in dramatic style. So I have two longs running at the moment. One's in CCJ, the uranium company, and the other one in the GDX, which are still looking okay. I just want to look at the SP500 because it's setting up quite nicely. Those of you that know my work will know that this is what a trader of yesterday, Richard Wyckoff, would have called an upthrust. It's just a classic upthrust where the market has come up, taken out these highs and then reversed. And I'm happy to report that I was short into that last week, and I did that in real time in front of an audience, in fact. So 40% of all upthrusts and 40% of all springs go back and test. So it broke and it went up and tested the level to the tick. That's just so common, and then it fell down, and that would have been that was a very good short just in there. If you were looking at intraday charts, that happened at the open yesterday afternoon. It went right up, ran the stops. And ran the stops a couple of times, in fact, during the course of the day before falling hard for the rest of the day. So if you're looking at an hourly chart, and that's not for the faint-hearted. It always looks easy in hindsight, but when you get into the lower time frames, not for the faint-hearted. Now, several weeks ago, I talked about a setup of mine which couldn't really be simpler. It's called a surprise attack. But it works remarkably well in the on the SP500. So if I get rid of this line now for a second so we can see the wood for the trees, I was looking for any reason to sell the market up around this high. I sold it on Wednesday on a short-term chart, and I got stopped out, and I sold it on Thursday, and it moved very nicely indeed. Just remember, folks, we're not trading to hit targets, we're trading to make money. It's a big difference there. So the surprise attack is simple. You get two bars. Now, the more bullish those bars they are, the better. So we should see an up bar, at least two up bars in a row. And the second up bar must close towards the high of the day, and the best setups occur when it occurs in the top 80% of the range for the day. This one's not as important, but in this case we have got two very, very bullish bars. So everybody's happy, and then the setup is simple. The surprise attack comes when it breaks down below that low, and that must happen in the next trading day. If it happens on the third trading day, or the trading day, or the second trading day, should I say, after it breaks the low, then that doesn't count. There has to be that rapid change in sentiment, so that was the short just there, stop loss above that high. And folks, you want to try and hold this for 2 days. As I say, we're trying to make money here, not to try and trade for a target. If you want to let them run, and you certainly can, then you put a trailing stop at that high. So when this day was over, you brought the stop down. When I make as much as I risk, I normally get the stop to entry. and then pull the stop down at that last high. So when that day closed, bring the stop to there, and you get stopped out the next afternoon. Now, we've got another one. And not often they come as quick as this, but that was a surprise attack yesterday afternoon. We've got 2 up bars, and as you can see, this one and even the previous one closed in the top 80% of the range. So if you in fact shorted the darn thing there, okay, and it's now going to open, unless something changes in the next 20 minutes, 30 minutes, it's going to open another 40 points down. So that's going to take us down to what, 44.80 odd, and that low, let me tell you what the fill would have been. That low was at 39. So let's say it's 40. Right down. There's a good 60 points in that, and that's money. Okay, you could certainly let it run. Now, this is a good example of one down here. There's 2 red bars, and you can see that close. And don't get your calculator out, folks. Just have a quick look at it. The darn thing closed in the bottom of the range, and then we have this complete change in sentiment just here. If I can get my line just there. And there's a couple of days it just kept on going, so you could certainly have pulled stop losses up behind you on the daily low, and if you had held it the whole way, then that would have been you would have been stopped out here. It's not designed to find trending moves. It's designed to find quick and sharp moves that you hold one day and then sell into strength on the second day. I agree there's a little bit of intuition and a little bit of experience required on the second day, but that's not a bad thing to pay people for. This one didn't work. Okay, you see, just there, you got in there and then it twizzles out, and you would have got out. You wouldn't have lost much money, you wouldn't have made much money, you wouldn't have made any money, but you wouldn't have lost much. You made it all back there, and you did well there, and you're now going to do well here. There's one just here, as you can see, textbook, just there. There's another one. So you just need, is what my mother used to say, the patience of Job, to sit and wait for them. And there's another one. Now that's a more difficult one because there was a gap open. You would have got it on the intraday market, but you had to, if you'd waited to put an order in, you could have gapped through that order. I think you would have got it if you're spread betting it. Again, as you can see, on the second day it sort of fizzles out, and quite a few do that. There's a beauty. You sold into that strength on the second day. So that's just something for you to think about. As a spread betting technique, trading a few times a month, I don't think it could be your only setup, but certainly not bad. And I've been doing these long enough now, you would think I could remember to take the ringer off. I seem to have a blind spot there. So where are we going to go now in this? So forget about a very pragmatic trading setup and move to a little bit of crystal ball gazing. I think that this could easily be 1 on this way up, and that's 2. And this is 1, 2, 3, 4, and 5. And I think this is wave 3. And at the minute, we're in a wave 4. And we have another run up. If that's the case, ladies and gentlemen, a wave 4 is normally a 38 to 50% retracement of wave 3. And that would take us down at least to there and maybe to there. So I can see that there's actually more pain in front of us. And this is in sync with what I spoke about at the VectorVest Q&A on Monday afternoons. Down to about there, or maybe there at that old high. So a bit of pain ahead of us, and then with any luck we have another wave up. And of course I could be completely wrong, and this is in fact a corrective pattern, and we're heading right down here. So we have to be very careful indeed. So the VectorVest advice does not advocate buying stocks at this time. I've got 2 stocks that say uranium and gold. I will see how they go. The UK is stronger for once. and the short-term trend has turned to down, and buy-sell ratio is still reasonably healthy. MTI's still reasonably healthy. It's off a tad this morning, not too bad. And I haven't done anything in the UK. I was going to buy, after these 3 green lights, I was actually going to buy something on, what was it? Tuesday, on Tuesday, after these 3 green lights, but the market in fact didn't open up. The market actually pulled back, so I just didn't do anything at all. So I've still got the same positions as I had on Monday afternoon. I'll have a look at them now if you wish. March the 24th, there we go, sort them by RT. Bloomsbury, Anglo, going well. CCC, I want to add to that. Pan-African Resources, Morgan Sindall, okay. Cape Tech, somebody emailed me earlier to tell me it was up today. McFarland, I like McFarland. AAF had a bad day out of news out of Nigeria, we shall see. And Sylvania Platinum still hanging in there. So I'm very happy with them all, to tell you the truth. Just let's get this pullback, if it is a pullback, out of the way. And I think we all need to be very careful indeed. It's not a time for fishing trips until we answer this question. Is this a rally in a bear market, or are we going to move up and make new highs? I remain optimistic, but then I tend to be overly optimistic at times. So just watch the Colour Garden Vector Vest. It will tell you exactly what to do. And certainly in the US today, it's telling us quite categorically to do nothing. And as I keep reminding people, doing nothing is much, much more difficult than it would seem. So let's have a look at the... that's what's happened this morning, folks. This is the early chart of the SP500. That's that big reversal yesterday afternoon. So there was ample place to have got short yesterday afternoon on the early chart before it broke the daily low somewhere down around here. Nevertheless, the surprise attack is a surprisingly easy and profitable methodology that requires very, very little screen watching. So I think at the open we'll see a rally here, certainly to the 21 bar moving average. If we look wider across the market, we can see that there's crude, and clearly there's a very important trend line at work here. I must admit I favoured another leg down here, but that has become less and less likely now. We shall see. There's a trend line at work here on this channel, and the target from that would be quite mighty on the upside, folks, in terms of oil. So oil looking, energy looking good. We've only got to look at that coal stock, which is the Tongela, which is the number one stock on VectorVest now for quite a few weeks, just roaring up the page. And then the last market that I will look at is gold. And gold, this is quite an emphatic low here. Again, I thought maybe there was another support as a way back here somewhere on a long-term trend line around 1850. And I thought that we were going to get to 1850, but we seem to be building a base here at 1900. This double bottom at 1900 looking quite strong indeed. However, for the moment it's in a range, so let's not just try and be too bright here. Let's just wait for it to break that range one way or the other. I am very bullish of gold, but I still haven't discounted a run down to 1850 before the real move starts. So let's just keep our eye on that. I've got 2 gold holdings, the GDX, which is a spread bet in the US, and Pan-African Resources, which is a fully owned position in my UK account. So a lot of noise around and big decisions to be made, and certainly the comments from the Fed governors, which say that a 0.5% hike in the US is pretty much a certainty. That's what the market read into that. Let's see how it opens, folks. Thanks very much indeed.